U.S. stock markets got hit pretty hard on Friday. In fact, all the losses of the week and all the indexes closed down on the week. But pretty much it was all due to the rout on Friday. The Dow Jones closed down about 750 points. At the low of the day, it was down just over 800. So relatively close to the lows. That was about a 1.7% drop. Similar decline for the S&P, down 1.7% on the day, about 1.8% on the week. NASDAQ Composite got beaten up a little worse. It was down 2.2% on the day and the week, so pretty much all the losses happening on Friday. Russell 2000 was the weakest of the indexes. It was actually down 3% on Friday, so 4.2% drop on the week. You know, the Russell 2000 now is in full-blown correction territory. It's down 10% from its November peak. You know, the NASDAQ or the Russell 2000 was a beneficiary of the Trump trade because the idea was that Trump's economic policies were going to be good for America, for the domestic economy. And so that was going to be particularly beneficial for the Russell 2000, which, you know, doesn't have the big multinationals. It's more of a pure play on the domestic economy, which was going to thrive under a Trump presidency. And so a lot of money went into the Russell 2000. Well, the Russell 2000 is not only down about 2% this year in calendar 2025, but it's actually down 3% from the day Trump was elected. So the Russell 2000 is lower now than it was when we elected Trump. So that entire trade has reversed. But it wasn't just the overall stock market that was down. The gold stocks got clobbered very hard, unnecessarily so, which is, again, typical the case for the gold stocks. The GDX was down about 3.4% on the day and about a similar amount on the week. And the GDXJ was down 4% on the day, which again was about the weekly decline. But gold was barely down, maybe $2 or $3 on Friday, and it was up about 1/3% on the week. So again, gold went up and gold stocks went down. Now, gold stocks are still up about 15% on the year. So they're still beating gold, which is up about 10.5% on the year. But they should be up a lot more when gold has been this strong. So gold stocks got hammered even more than the overall stock market when the price of gold was not down very much. Now it's down about $6 or $7 today, but it's still, tonight, I'm in the evening, but it's still $29.30. I mean, the record high is $29.42, $29.43. So we're almost at record highs in the price of gold. So why did these gold stocks get clobbered? Well, I think it was more of a buy the rumor, sell the fact on the phenomenal earnings that gold stocks were reporting on Thursday and Friday. And they bought the rumor, sold the fact. Except nobody really bought the rumor. They just sold the fact. I mean, nobody was buying gold stocks because of all these great earnings, at least not that many people. But they sure, programmed the computers to dump them as soon as the earnings came out, especially if the earnings missed. So take a company like IAMGold, which I own IAMGold. We own that in our funds. That stock was down 9.4% yesterday. That's a big drop for IAMGold, right? And they missed their earnings, but their earnings were up 717% from the prior year. I mean, that is an enormous increase in earnings. Revenue was $1.63 billion. That was a 65% increase over the revenue from a prior year. So a massive increase in earnings. And their earnings in 2025 are going to be even greater than they were because a lot of the gain in the price of gold happened at the tail end of last year, and we've had a big move up already in the first couple of months of this year, right? So Earnings are going to be up, but the stock got killed. But it's trading at 10 times earnings. I mean, if you're only at 10 times earnings and you just grew your earnings by 717%, why would your stock go down because you didn't grow your earnings by 750% or whatever it was the analysts had expected? It's almost like they deliberately have a high expectation so the stock can't meet it, so it gets clobbered, even though the earnings growth is phenomenal. Now, when Newmont Mining, though, right? Newmont Mining reported, I think, blowout earnings. The stock was down almost 6%, on Friday. And it's these type of stocks, right, that are really driving the narrative. But so Newmont was supposed to earn $1.09 for the quarter. They earned $1.40. So 31-cent beat. That's a big beat. Also, their earnings for the quarter, the rise from the prior quarter was 285% increase in profits. And revenue is $5.6 billion. But almost a tripling in quarterly profits. And the estimates, they beat their estimates by a full 9 percentage points. But the stock went down. And the bad news, right, what really got people to sell the stock was that they forecast their all-in production costs would be higher in 2025 than they thought. I think it was around $140 an ounce extra. Now, why are costs going up? Maybe they're mining some lower grades. Inflation is driving up costs. But gold is already up by about $300 an ounce this year. So gold is already up by more than double what they said their costs are going to go up. So that's still bullish. Yet analysts ignored the beat, right, and just focused on this negative comment that costs are going up, but completely ignoring that gold has already gone up more and will probably go up a lot more, right? Gold is not finished going up. Gold could be $3,500 by the end of the year. Maybe it'll be $4,000, right? But nobody is factoring any of those possibilities into prices. So, they just dump these stocks. Look, I think it's a great buy. I think these stocks are going to bounce back pretty strong next week. I think this is a gift, the fact that they were down on Friday. So you should buy them on Monday. As I've been saying, I think buying gold in the ground is cheaper than buying it above ground right now. It's cheap. It's dirt cheap. So people should be buying gold mining stocks. They should be buying the Euro-Pacific Gold Fund, EPIGX, right? Euro-Pacific, I forget it, EPGIX, Euro-Pacific International Gold Fund. EPGIX is the no-load symbol for my gold fund. You can buy that at any discount brokerage firm. You can go to Europac.com website, EUROPAC.com. You can buy the fund right off the website if you don't have a brokerage account. If you have a larger portfolio and you'd like us to manage a portfolio, separately managed portfolio of mining stocks, we can do that as well. Just talk to the representatives at Euro-Pacific Asset Management. We have other strategies, of course, that don't just focus on the gold mining, but they are really giving these stocks away. I think this could end up being one of the best years ever for gold stocks. It's already starting off good, right? Gold stocks are up 15-16% on the year. They were up about 20% until Friday. So I think they're already off to a good start. But I think this is slow compared to what I believe is going to happen later in the year as this stagflation scenario really unfolds. And people appreciate just how bullish this is for gold and how bearish it is for the dollar. In fact, the dollar index has been rolling over. In fact, the euro now is almost back above 105. Let me take a quick look. Maybe it's jumped above it. It was just below it. Yeah, we're at 105.1, up about 50 basis points so far today. Dollar down against the yen, down across the board against the Swiss franc, Australian dollar, down against the pound. Look, if the dollar index really starts to roll over, and it started, so I mean, if it continues, and the dollar index really cracks below 100, I kind of think that's a key level for the dollar index, and maybe 140 dollar yen, would be around there. Right now we're at 106.3 on the dollar index, but then we're really going to start to see a drop in the dollar, and that's going to be very bullish for gold. That and collapsing real interest rates, because even if the Fed doesn't cut, inflation is going to go up, and they're not going to hike. But if the stagflation, if the stagnation part of the stagflation combo really rears its head in a bigger way this year, the Fed will cut. There'll be all sorts of pressure from the Trump administration and Congress on the Fed to cut rates, and if the economy starts to weaken, they will cut rates, and that means you're going to have nominal rates going down as inflation is going up. That means real rates are collapsing doubly, which is extremely bullish for gold and bearish for the dollar.